For more, Bloomberg's Serena Sasaki joins us now from Tokyo. So obviously this was a highlight in terms of what investors were looking at. What else jumped out to you in these numbers?
Yes, so the big takeaway from Friday was the strong beat across all major metrics, driven by an explosive start for the new Switch 2 console, and an operating income rose to 57 billion yen, beating analyst consensus by nearly 4%. Net income jumped 19% year on year. That's 65% above consensus. The revenue soared 132% to 572 billion yen, and massive growth off the back of 5.8 million Switch 2 units sold and 8.7 million games and in just 7 weeks. Much of this strength came from early global demand, particularly in US and Europe. So Nintendo bundled Mario Kart World, a title that sold 5 million units with many consoles driving volume but compressed in average selling prices. So despite this blockbuster top line, margin did not expand meaningfully, a clear sign of heavy marketing spend and early cycle hardware dilution.
So it was a strong quarter. Why then did Nintendo leave the full year forecast unchanged?
Yeah, that's a great question. And frankly, that's what puzzled many analysts on Friday. Nintendo reaffirmed the full year revenue guidance of 1.9 trillion yen and operating profit 320 billion yen, both far below consensus expectation. They are still projecting 15 million units of Switch 2 by March, figure that looks low given the current pace. They've already sold 6 million in less than 2 months, but there are clear reasons for this conservative stance. First is the company's cautious FX assumption, 140 yen against the dollar and 155 euro against yen against the euro, and uncertainty around U.S. import tariffs, where 20% duties on Vietnam shipped console could crimp margins. So Nintendo's guidance looks like it's building a cushion, particularly on profitability, even though a potential production upside to 20 million units if they ramp up with Samsung.
What are some of the risks for the second half then?
Yeah, so there are three main risks. One is the tariffs. A new 20% U.S. tariff on console assembled in Vietnam could eat into margins. Nintendo President Furukawa said they might pass on those costs to customers, but that could hit demand in price-sensitive markets. USB sees a potential operating loss in hardware segment once tariff bites. Second is sustaining momentum. The Switch 2 Switch 2 is Nintendo's the priciest console ever at $450. And while launch demand has been strong, the question is whether it can maintain sales velocity through third and fourth quarter, especially without the price cut. And lastly, product pipeline. The October launch of Pokemon Legend DHA will be a major test of software strength. The margins depend on the software outselling hardware, so continued momentum from the first-party title like Donkey Kong Bonanza is crucial. So if the Nintendo executes on both hardware and high-margin software, and tariff proves less disruptive than feared, there's a case to be made for upward revision to full-year revenue and the profit forecast later in this year.
Bloomberg's earnings specialist Serena Sasaki there on Nintendo. Taking a look at Japanese bonds, which are also, in terms of futures, on the move at the moment. The 10-year bond futures rising as we continue to track the rally in treasuries, the fall in yields that we saw in the Friday session for U.S. treasuries, rallying as traders ramped up their bets on deeper Fed rate cuts, more of them, and starting sooner than expected after that weaker than expected U.S. payrolls number that continues to play out in the Asian session as well. We're also seeing BOJ watchers bring forward their forecast for Japan's next rate hike. We had some clarity, of course, over trade increasing last week with the Trump administration, including that deal with Japan. Some 60% of economists that we've spoken to seeing the next hike to come as early as October.
And you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. And subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.